While in the banking sector, several months after the Nigerian Central Bank set out guidelines for the rollout of a policy, the agency banking policy, the rollout of this policy has been rather slow, and Jude Anele joins me now to discuss the opportunities and challenges associated with agency banking in Nigeria. Thank you so much, Jude, for joining us. He joins us, of course, from Diamond Bank. And Jude, I know your bank is very involved in retail banking, and as we come towards the end of this Q3 earnings season, I want to get your thoughts about the impact that retail banking is having on bank earnings before we talk a bit about agency banking in Nigeria.
Yes, thanks, Wale. Retail banking divisions or SBUs in banks actually contribute a great deal to the performance of this bank, especially in the third quarter. In most banks, retail deposit, that is core retail deposit, actually contribute between 40 to 50% of the total deposit base in the banks. But on the asset side, you might find that retail assets may just constitute about 10 to 20%. So when it comes to net interest margin, you find that retail business plays a great role because they supply the very cheap funds to banks to lend to the upper market, which is the corporate. So if you look at the net interest margin, retail banking plays a great role. If you look at deposit base, retail banking plays a great role. But on the asset side, of course, it's usually lower because these are small size loans, though large in number, but few in terms of size.
Yeah. All right, let's move back to this discussion around agency banking. And like I mentioned earlier, we have seen the central bank rollout policy in this regard, but the uptake has been pretty slow. And we haven't seen many banks do much in that respect. Can you just talk us through the reasons why the rollout is that slow?
Well, you remember before the central bank had allowed banks to start agency banking, mobile money operators were the first one that were allowed to develop agents. And the central bank, I suspect, noticed that the rollout was quite slow, and they thought there were some capital constraints affecting these mobile money operators. So they now asked banks to actually join the fray, which also obtains in some other markets. Now, the thinking then was that banks will be very quick to the uptake. And when central bank now said banks can go on without having any special license to operate agency banking, the thinking in those quarters were that almost off the mark, most banks would jump into the fray, but this hasn't happened. One, the critical factor affecting this is actually the non-exclusivity clause that is embedded in the guidelines to agency banking, which means that no bank or deposit money bank can have any exclusive arrangement with any agent. Therefore, if you sign up an agent now, other banks will also have liberty to sign up with the same agent. Therefore, what you may have is what we call first mover disadvantage. That means if you move to onboard an agent, set the agent up, set up the system, the agent can also use the same system to service another bank. So you find that if you came second to the agent as a bank, you had an advantage over the bank that came first. Right. That is one. Two, when it comes to cash in, cash out, that means customers being able to withdraw cash from the agent or pay in cash, it's okay to have this non-exclusivity. Right. However, when it comes to recruitment of customers, it's difficult to have one agent recruit customers for two banks. What will happen is that it may actually be incentivized by one bank to recruit more customers for it than the other bank. Therefore, one bank may actually say, well, for every customer that comes here to open an account with another bank, I incentivize you if you're able to convince that customer to open an account with me. Right. So the issue of non-exclusivity is creating that lag, in my view, in the rollout of the agency banking business.
But how big is the opportunity? Very quickly, because I really need to wrap this up. How big is this opportunity? Because at some point, we expect that the banks will begin to leverage on the opportunity that exists right now.
The opportunity is quite huge. I think these are just early days. I believe by the first quarter of next year, most banks will roll this out fully. People are just watching one another. But in terms of opportunity, you cannot reach the unbanked and unbanked segment of this economy without agents. Yeah. We've seen the examples in Ghana, in South Africa, and in Kenya. Without them, it will not work. And banks will know that if you must reach the unbanked and underbanked, then you have to have agents, one way or the other. Well,
we'll be watching how it plays out. Thank you so much for joining us, Jude Anele, Head of Retail Banking at Diamond Bank.